All right, welcome everybody. What I'm going to do today is talk about the performance of my portfolio over 2024, but also go over my plans for 2025. So I want to share with you what I sold and bought in 2024, and then highlight my plan to outperform in 2025. Of course, we're going to see just how I did in 2024, if I reached my goal, if I did not. And lastly, before I really get diving into this, if I sound like I'm investing heavily into Altria, that's because I've been sick, so please excuse the voice. Not many of you will get that joke, but if you did, be sure to comment below that you got it. So let's get started. Again, let's just dive in to share the performance of my portfolio, and we're going to begin with a month-to-month look at gains and losses. So this is showing here that 3 of the 12 months of 2024 did I have negative performance, shall I say. The rest was positive. So this is a good thing. I feel that's a great initial look at my portfolio and the success that I had with choosing the stocks and investing in what I invested in. Now, if we look at the performance, this is what you all kind of probably really want to know. My portfolio grew 15.23% in 2024. Now, if we compare that to the S&P 500, which grew 25%, I trailed about 10 percentage points. And if we compare to the Dow Jones, I trailed about 8 percentage points. So really, I look at this two ways. First of all, the good, I'm growing in double digits, in 15%. That is really good. That's almost double the average of what the normal average investor returns. And a lot of people, let's face it, if they invest in the wrong things, you could be at a loss. So 15% growth this year is really good. Now the downfall, again, I share everything on this channel, the good and the bad. So where I did not really shine and perform as much as I wanted to was by trailing the S&P 500 by 10 points, and that was mainly due to the REITs I held. Now the REITs this year were really struggling because the Fed kind of kept rates higher for longer, and they're kind of signaling again that they're probably not going to lower them as fast as expected. So of course, these REITs are going to suffer because they operate on leverage. So that's really the main reason why I didn't perform as well as S&P 500. But we're going to take more look into that. But next, let's talk about the next popular thing, and that's dividends. Overall, my dividends, I'm earning about almost $200 a month on average with my passive income. This could be 2 to 3 times higher have I not pivoted this year more towards growth. So I did sell some bigger dividend players and payers, and I'm moving more towards growth because I'm still fairly young and I have decades to go before I would like to move and pivot towards dividends. So I want to take advantage of that. I don't want to lose the opportunity to really make some good gains before I feel I have to tighten up, be more conservative. But $200 a month, that's still really good. That's going to pay for my internet bill and maybe a utility or two. So I'm very happy with this, and I get to reinvest that money, and that snowball effect happens. Next, let's look at the asset allocation. Now, I'm virtually 100% invested in domestic stocks, but of course it's divided out between cash and stocks. That's what that short term is. That almost 11% is just me holding on to cash. And my goal was to build up my cash position because I feel the market is overvalued and will have some dips this year. I'm not saying we're going to have a red year. I think we'll still have a year in the green, but there's always opportunities that pop up, and that's what I'm saving this short-term cash for, this 11% of my total dollar value of my portfolio, so I can execute and take advantage of any dips in stocks, in new stocks, in my current stocks, wherever it may be. That's what I'm going to do with it. But really, I'm all in domestic stocks. I have a little bit of foreign stock there, but I think that's probably allocated from one of the ETFs I hold. It's probably a stock or two in there that are foreign stocks, but really, I'm betting on the US. Next, let's look at how analysts rate my portfolio. These analysts are basically taking the stocks that I own and they're going to say, are they very bullish, very bearish, or in between. 18% of my stocks analysts are very bullish on, 51% of my stocks there's neutral rating, and 30% there's a bearish rating. Now, this is just kind of fun to look at, but I don't hold any weight to this because analysts get it wrong all the time, and they have a very short-term view. I have a long-term view, but it's something to compare and always look at and kind of look at why the analysts are rating stocks that way and see if it's something that will cause you to kind of change your perspective, or does it have nothing to do with your long-term goal and outlook on that stock. And for me, I take these with a grain of salt. Really, it's me that's bullish on all my stocks, maybe except for one. I'm going to talk about that in a little bit. But I wouldn't be investing in these stocks if I wasn't very bullish. Now, if we look at the sectors of my portfolio, the top 3 sectors make up 57% of my portfolio. So I have 21% in real estate, and that's why my portfolio didn't really keep up with the S&P 500, but I'm not so negative on that because it's adding diversification. I will talk about that in a minute. Now, 19% is in information technology, and 17% is consumer discretionary, but that's all Amazon. Amazon's in the consumer discretionary sector, but I consider them more of a tech stock, so you could almost say that I'm almost 38% in the IT sector, but the way the market labels this is the breakout. This is 57% of my portfolio, the top 3 sectors. So now let's look at this heat map, which compares the market cap of my companies and also is it more of a value investment or a growth investment. Most of it is in the large cap and it has a blend of value and growth. So the companies are deemed to have both value and growth aspects to them. But I do have 15% in the large cap value stock side and 2% in the large cap growth side. Now I do have in the bottom right there small cap 11% in the growth, and that is my health equity stock. That's my newer holding. It's a small company, one I'm betting big on. I have a lot of money allocated towards it, and I also have 17% in the medium cap value. So what I want to do is kind of move from the value side more to the growth side, especially on that large cap. So that's my goal for this year, and we'll see just how I do. I have some ideas on new companies I want to invest in that would put me right in that large cap growth, put some more value and weight towards that. Now, if we compare this to the Dow Jones, you will see the Dow Jones has somewhat more of what I want to do. They have more in that large cap growth square there. But I like to also have what I have in that small growth, that 11%, because sometimes that's where the opportunity lies. Those small companies that could really grow fast, and that's what I'm betting on. So that's what I want to do, is move from the value to the growth column more, but I do like that I'm highly concentrated in that large blend, just like the Dow Jones. Now let's look at my portfolio. I ended the year in the green, overall 30.18%. Of course, my 2024 year, I grew 15.some%, but over the whole portfolio overall is 30.18. And you'll see here the sectors and the stocks that I hold. Technology is a big one for me. Again, I put Amazon in that sector for my portfolio. I think it's more of a tech than a consumer discretionary, but it is my largest holding. In blue there, that's the allocation of my portfolio, and it makes up 15.27% of my portfolio. And then it sticks out like a sore thumb, the real estate sector. This is why I underperformed the S&P 500, is because I held a pretty large allocation, especially with Vici, though I'm very bullish on Vici, and I think long term this one's going to be a good performer for me, and this one is the one that provides me those dividends mainly. Now, realty income I do think is my weakest link. I'd say that's the one that I'm neutral on and most likely to sell this year if I'm going to sell any of these. The rest I'm pretty darn bullish on, and I see no reason to sell unless something fundamentally changes or my strategy just no longer fits it. Maybe I adjust my strategy throughout the year as well. But right now, I'm focused highly on growth, but I do have some stability in here. I do want, to have some downside protection. That's why I have those ETFs, SCHD, which is the dividend ETF, and SCHG, which is the growth ETF. Those are kind of going to diversify my portfolio, add some downside protection. Also, Union Pacific, I think that's a pretty safe company. It's going to be the one that performs well during a down market and probably doesn't perform as well during a growth phase of the market just because of how it operates. But railroads are pretty sturdy. They're pretty dependable. So those three are my main just kind of stable investments that will keep my portfolio grounded. And then I'm really betting on the health equity to really grow my portfolio. And that's the small company I'm betting on, right? I invested in this company in April, maybe March, and it's already up 23.47%. So this was a very good move on my part. I saw a company that earns money from fees. It's got a growing product, just a lot of good about this company. I made many videos. Be sure to watch that if you're interested. And then S&P Global, I think that's going to just be a very good, solid outperformer. In the tech sector, I think we could see some turbulence, but overall long term, I really think these two are going to provide massive growth for me. And then Vici, once rates kind of do come down and investors are no longer fearful of the REIT sector, I think Vici is going to really rock it up. Realty Income, I just think with their mainly being in retail, or Vici's in those experiential properties, I think Realty Income is one that will probably hold me back, so I'll probably sell it at some point. But it's been diving down, so I'm not going to sell it at this point. I think there is upside for the REIT market. I think there's some undervaluation going on, and so that's what I'm going to do there. And then, of course, I'm going to be adding 1 or 2 stocks this next year in 2025. I have a watch list that I'm keeping my eye on a few stocks, which I'll be sharing with you at some point soon. So my goal for 2025 is to continue shaping my portfolio to be one of high quality that produces high returns. Again, this year, I think if it wasn't for my 2 REITs I held, I think I would have outperformed the S&P 500. But this next year, my goal is to outperform the S&P 500, so we'll see how I do. Now let's talk about 2024 real quick. Let's talk about what I sold and bought. So the companies I sold were Johnson & Johnson. To me, this is just a stock that's going through a lot of regulatory change. They have a lot of lawsuit exposure that I didn't like, and they've just kind of been on a slow growth path for a while now, so I decided to get rid of them. I'm glad I did. Another one I sold is Cisco. It's just, to me, this is an old company that can get disrupted pretty easily should another big tech company decide to kind of move in its lane. So I got rid of that. I sold an ETF called FENY, F-E-N-Y. This is an energy ETF. I think energy is a great investment. I solely sold this one because I just had such a small dollar amount invested. I wasn't planning on adding more, so I decided to get rid of it. And then I sold 3M. That company has potential to turn itself around, but I just think it has high capex. Again, it deals with lawsuits, just nothing I want to be attached to. And lastly, I sold, I think, the worst company I ever bought. One of the worst, shall I say. There is one that was worse. That's Tattoo Chef. But this one, AT&T, I sold in 2024. This one's just going, if you want to underperform, invest in AT&T. That's all I'll say. I don't want that, so I sold it. Now, stocks or investments that I bought in 2024, of course, I was talking to you about health equity. That's been a huge success for me so far. In less than a year to be over 20% in the green. That is great. I'm very bullish on this, so that's something I'm excited to see what happens over the next couple years. And then I bought an ETF, SCHG. That's a growth-focused ETF. I already had the dividend ETF, so I figured I'd couple it with the growth, and I think that's a good combination to have. I'm going to keep these two at about 20% my portfolio, just to add that safety, and then the rest will be my individual stocks. So that's what I did in 2024. So what I really did was I condensed my portfolio and increased the quality of my holdings. That's the other reason why I think I underperformed too, is I held these stocks that I sold for part of the year, right? These underperformers, as well as the REIT sector. That just was what really did it for me. But again, 15%, that's where those other quality stocks I held really came in and helped me out and at least got me into a good double-digit growth range. Now in 2025, again, I'm going to add at least 2 more holdings, and I will sell any stocks in my portfolio that I don't think fit in my high quality, high return goal. And the one I'm considering, as I told you, is Realty Income. I just think this one's mediocre at best, and I'm just kind of ready to take those funds and put them somewhere where I think that money will grow faster. So how do I go about buying a high quality, high performing stock? I follow this quality checklist I created. Feel free to snap this and take it for yourself and change it how you would like to create your own strategy. But I buy stocks if they meet at least 5 of these points, but all 6 is preferential. So if the company has strong financials, this is why you want to get to know the balance sheet, income statement, cash flows, and all the different metrics that you can learn to help you determine, is this company a very solid performer when it comes to its financials? And I won't say solid, I'll say an outperformer, right? We want outperformance. And do they have good margins, good profits? All that stuff you need to look at, get to know, get to learn it. And that way you can measure a company on their financials and make sure they're very strong. And also, I look to for a company to have an effective management team. Is this management team making good reinvestment decisions? Are they generating strong returns? And, sometimes you can look at the CEO or the CFO, see what prior company that they oversaw and how did that company do during their tenure. Things like that you can look at. Then I like to see if a company has positive brand recognition. That means, do they have staying power and growth? Is it something that, sometimes you look at Nike, right? I think that's a risky one because if something negative happens, all their money is in that name, Nike. And if something goes wrong, that can really pull them down quick, right? And have a negative outlook for a while. It'd take them a lot to turn that around. So I want a company that has positive brand recognition and that I feel is pretty stable, right? Has pretty good, bright future. Then, does the company provide essential products and services? This means that they're going to create repeat customers, right? Do they have sticky subscriptions? Does it create customer dependency? Do they have a sticky ecosystem, right? Many offerings where once people get entrenched into all the many different services and products, they're less likely to leave. That's what I like, as well as a company that has a wide moat. Do they have a competitive advantage? Do they hold a monopoly or duopoly or triopoly even? Are they hard to disrupt or replicate? Those are strong characteristics for a company to have that I like to see. And then lastly, is it at a good valuation? Are they historically below various financial measurement averages? Then they're probably a still if they meet the 5 points above. So that's my quality checklist. That's how I buy stocks. Let me know your lessons learned in 2024 or any successes. I'd like to hear it all. My lesson learned was to let go of my losing stocks sooner and to not get attached to them. I think too many people fall in love with their stocks. And I'm in this to make money, not to be a dedicated soldier of a company. You want to strive for those companies you think you could hold on to forever, but you need to be willing to let go if they no longer fit your strategy or if their fundamentals are falling apart. So don't get attached to these companies, right? You've got to treat them as money-making investments. That's what they are. And you got to be okay to let go of them should they no longer fit into your goals. Now, my success was staying patient and not acting on FOMO or pressure from others. I overall stuck to my strategy, and that felt good to look back and know I can stay on my own path. I think this is key to successful investing and why I did what I consider fairly well. And this helped me also avoid some bad decisions that would have really tanked my performance. So that was my success and something I'll keep on doing. Patience is hard. It is hard to achieve, but if you do it, it pays off. Also, let me know your 2025 goals for your portfolio. Are you focusing on value, growth, or dividends? Do you have any plans to restructure your portfolio like I did in 2024? Again, my goal is to increase quality and returns, so I'm on the hunt for at least 2 more additions to my portfolio in 2025. Now, I wish you all a successful year of investing. On this channel, we are an investing family, and we are all here to help each other become wealthy, so please consider subscribing and joining my channel. I'm 100% transparent and will always share my successes and failures. Many people wouldn't come out here and say, hey, I didn't beat the S&P 500. I'm telling you, I trailed 10 points. There's some positive and negatives with that, but that's what you're going to see with this channel. So that's all for today. We'll see you very soon on Mark Arnold's Finance.